Good morning, everybody. Is everybody enjoying the Biden market this morning? Oh my God. I had to start off with that. When things are going good, it's the Trump market. When things are going not so good, it's the Biden market. I'm a little frustrated because I had, 30,000 shares of QBTS yesterday, about $19, and it just closed way too strong for me to hold it overnight. And IONQ, I was like watching it. It literally filled the gap perfectly. And I didn't take it. And then from there, just basically no stress and a whole lot weaker, right? A whole lot weaker. Like if you looked at the gap 48.73, I mean, this thing goes and fills the gap to like the T, breaks the gap by 20 cents and then just fades, stays heavier, right? QBTS goes and makes a new high in afters, and IONQ just no real rebound. Obviously, you get the news today, and then just an even bigger fade this morning. You're talking like a 7-point fade off highs, 10% plus move, effectively zero stress. I do have CoreWeave, $113, and I did cover some this morning, just under 97. So I feel pretty good about that. But, I'm also getting my ass kicked in my Tesla. I'm getting my ass kicked in effectively every other long I own. The only other short I have is GRRR, and that one doesn't really matter as much because the position's only so big. CoreWeave was a full-size position from 113. So I feel good about that one. But, on the flip side, it's like, I've got some shares of Tesla that are going down, and I've got some shares of CoreWeave that are going down. So it's like some of my two biggest positions, one long and a short, they're kind of just washing each other out. So would be nice if I had QBTS in there as well. It just closed too damn strong. So that's a shame. Didn't go with Rigetti either. Stupid. With this much needed pullback, I'm curious, how are you approaching your positions? Where are you drawing the line? I need to stay flexible. Yeah, so for instance, CLS, I'm out half. A GRR, I was out half. KGC Gold Name, it's actually going up right now, which I still haven't trimmed. I bought it off the 50 simple moving average. Today is going to probably be a trim day for my KGC. My Netflix, I'm already trimmed. My TMDX, I'm already trimmed. My Toast, I'm already trimmed. My Uber, I'm already trimmed. Tesla, I was untrimmed, but I bought it as it was going through the 200. Now, if we break yesterday's effectively the 10 simple moving average and start to hang out below the 10 on Tesla, I will look to cut half my position today. And then on the flip side of that, the past 2 days, I've been trying to get short some. Like I noticed the weakness in MSTR yesterday, and I did nothing, Kenny. And I just like sat there and I was like, oh, Bitcoin's at all-time highs, MSTR will just rebound, blah, blah, blah. I didn't short it, even though it rejected prior day high, stayed heavy the entire day. I even tweeted about it, how it had been showing notable relative weakness. And I just did nothing. Instead, like a total moron, I picked on QBTS, which was, it was going sideways, and IONQ was still ripping. And, IONQ ripped like another, $4 or $5. It seemed like $4, call it, if I want to say, about $4. And QBTS did nothing. So I was just like, okay, let me just short the one that's showing some relative weakness, not really going any higher, QBTS. And when IONQ starts to pull, QBTS will roll over. Okay, well, IONQ goes and fills the gap, yesterday, as you guys can see right up here, or literally the gap fill from the gap down, and fills the gap. I mean, stupid 40% up day, almost as if they had cured cancer. And then sure enough, it just fades and then gaps down overnight. QBTS stops me out because it doesn't close weak, and I can't hold it overnight without some kind of cushion, similar to CoreWeave. Like if we looked at CoreWeave, so I was like thinking to myself, okay, either I'm going to short names that are very weak, and that's usually the right thing to do, right? Like something like home builders or solar names or XLV names. And John, I can kind of talk about my setup on CoreWeave. I actually posted my execution in the room, and I just trimmed some this morning. But so with CoreWeave, I was like looking for a few more shorts to balance out my longs because, I've got Uber and I'm trimmed, but obviously, watching it pull back, $6 off of highs, watching Tesla pull back, 10 points overnight, stuff like that is not the most comfortable, or really 10 points from this morning's high on Tesla. But I just wanted to be hedged a little bit on the short side. And it's not to just make a bunch of money on the short side. It's really to allow me to hold my best stocks against the rising 10 and 20 simple moving average. And then to just keep my equity curve effectively flat, right? Like maybe a little bit of a pullback, using progressive exposure to get positioned. And then, just keep my equity curve flat. So if the market begins to pull in, and then maybe I even get stopped out of a few longs, right, I have a few shorts that are already working for me, for instance, like a CoreWeave. So, I could talk about my CoreWeave, and I could tell you guys exactly how I played it and the where. Okay, so CoreWeave yesterday, I tried a position at, what time was this? Would have been 9:10 in the morning. Okay, so effectively, as this thing was rejecting its red to green daily candle, I got positioned at 11:37 was my average. So effectively in this 5-minute candle, rejecting it's red to green. So like when this thing breaks above its opening print, the daily candlestick is green. When it's below it, the daily candlestick is red. And I was playing it as a first red day, meaning it would, this beautiful, beautiful run, kind of a parabolic move. And now it's a first red day. That's how I was playing it. And it had to be below its opening print for it to be valid. I ended up covering that starter. And I only ever put on shorts, I only ever put on starters, and then I add to my winner as it's working. So I had 3,000 shares there and as my starter, and ended up covering it 114.40. So effectively when this broke out over its 5-minute opening print. So what time would have this literally been? 9:32 in the morning. So right on this candle, I'm covering 114.40. I then reshort 4,000 shares at 114.83 at 10:55. So as this thing is breaking down back through the 5-minute opening range break. So if you're looking, kind of this level right here now is your 5-minute opening range break. As the tape started to get heavy right in this level, I had a 114.83, 4,000 shares. And then I added 3,000 more at 112.04. And that would have been at 11:07. So as it was breaking back through its opening print. So again, still playing it as a first red day, but now I'm sitting on like roughly a 113 average, and I'm okay using high of day as my stop. CoreWeave then never, yes, it flushes. I'm feeling all good. I'm up $5 a share, whatever. And then it starts to rebound. Obviously that sucked, but my stop was high. And then, the rest is history. Acted weak for the rest of the day. Once it started to break below VWAP, and then I got this nasty kill bar here And then the stock went red on the day. I was feeling completely healthy, or should I say happy, content, whatever word you want to use, not nervous about what was going to happen. And then obviously the thing closed super weak, 100. I was looking at the 5 simple moving average, $93 at the time. And that is moving a little bit higher today. And that's like, it's going to be a little bit higher today, just because even though price is going down, it'll be going up. And then obviously, you get the news this morning, and pretty much everything gets hit this morning on that news. The EU 50% tariffs, Trump can't make up his mind. He's taking his morning shit and he is tweeting from the toilet, as Nate put it. And so you get the little break under $100. You get a quick little washout. And I took some off this morning, 96.90, and I got 5,000 shares left. So hopefully that was a pretty decent explanation of how I've played it so far. Any sort of weakness into 94, I want to get myself down to like a half position, and that'll just make up for some of this Tesla pullback, and that's about it. So nothing I could really do more about that. And yeah, that was CoreWeave. And it a short like this just kind of allows me to sit in some of my longs as they pull back into their ascending moving averages. And again, I am long KGC, and I bought this thing off the, rising 50, 1362, and now we're 1480. So, while some equities pull back, while my Uber pulls back, while my TMDX and Toast and these others pull back, and on the flip side, I've had some really, really nice trades recently, right? Like I'm in at $100 on the CLS, and, we're up 15+% on it. So, and I'm already trimmed. So effectively here too, I kind of trimmed like $115 as well a few days ago. So, that's all you can really do is buy it right, trim some into strength, and then sit tight on the rest. There's like nothing else you can really do. And we'll see, we'll see kind of what happens today. I kind of made mention last night on the watch list video, I'm just have no real plans on buying anything. It's like you could look at flags like AVGO, right? Just too short of a flag, too extended from the 50, right? Carvana, right? Too short of a flag, too extended from the 50. Even with MSTR, still a nicer flag, but kind of starting to show relative weakness. This one actually started to look a little bit better, but still a little too extended from the 50. SE, right? Short flag, too extended from the 50. Rubric, no flag, way too extended from the 50, right? Hood, no flag, too extended from the 50. So it's like what I was noticing with some of the very best stocks in the market is they're just still too extended from the 50. I could see what the best stocks are. I want to be in the best stocks, but I don't want to be buying stocks too extended from the 50. And the rule for me is you're not buying something more than 4 times its average true range, depending on if the stock likes to gap up quite a bit or not, or average daily range from the 50. So I have a really, really nice script for that. The 50 simple moving average, Scald. So yeah, that's kind of been my thinking. And I told everybody in the watch list video last night, I don't plan on doing anything. It's a 3-day weekend. I was expecting a little bit slower of a day today. Obviously that didn't happen with the morning news, but it's a 3-day weekend. And I joked that I didn't really trust that, Trump, Bessner, Lutnick could keep their mouths closed for 3 days. And, stocks are still extended from their 50, and they would just need to tighten up a little bit before I got more involved. So that was literally my thinking. That was like my little soliloquy for everybody in the room. And that's kind of that's my story. I'm sticking to it. So yeah. Stock Maniac, what rules do you follow to decide where to place the stop loss on a short? Also, do you have any rules for spotting downside extensions to avoiding entering a short in the first place? Yeah, so I love shorting things as they're breaking like a clean little setup, or as they're almost hugging that moving average, because if they're hugging the moving average on the way down, I just use that moving average as my guide. But when I'm shorting an extension like a QBTS or an IONQ or a CoreWeave, right? It's like I'm looking for the logical areas, right? I'm looking at it as a first red day kind of a trade. So if it's a first red day trade, it needs to be below its opening print on that day of its overextension. And then obviously, you know, if the stock then runs up a little bit more, but I still have like a pre-market high, maybe I'm looking for it to swipe through that pre-market high, fail, and then stay heavy from there, right? And you'll see that in the tape, with a little bit of experience of reading level 2. But the way I like to treat shorts, especially stocks that are overextended to begin with, is I'll take my short, never full position. I'll add to it as it's working. And for instance, that's exactly how I talked about CoreWeave, right? I took my short as the tape, kind of went up and then broke back below that 5-minute opening range high. And then from there, when it broke back below or was breaking back below its opening print, which would still make it a first red day setup. And, hopefully the explanation on how I took CoreWeave was, how I did it. And like I said, I don't ever really oversize these things. It's the CoreWeave was, less than 5% position roughly, but it was so volatile that I knew, hey, you already lost 10K on it. Don't go, you're risking like another 20 here, don't go risking then another 30, right? Like I don't want to just take a 6-figure loss, just trying to find the top on something. So, don't overexhaust yourself, and then, make sure you're adding to your winner and not adding to a loser. So, because the market's telling me I'm wrong. And so I just take my exit. And then, but if the market's telling me I'm right and I'm not necessarily increasing my risk. Now, if it's like, for instance, an earnings gap down, and then it gives me that high volume close for a breakdown below that high volume close, I'm good with that. If it's a breakdown and then you get like a 5-minute opening range break, if it's a breakdown, then you get a bear flag, and it's similar to, oftentimes it has to do with environment, right? Like recently things just got a little overextended to the upside, but when we were in February, right, things were just, or even March, right? Things were just gapping down on earnings and you can get your entry right away. Things were rejecting on earnings like AVGO, and then you were just building a bear flag, right? You just move down, sideways consolidation, just the opposite of what we're actually seeing now, right? A move up and then a sideways consolidation. This was a move down and a sideways consolidation and then some follow through. So again, it's just different strokes for different folks at different times in the market, right? And I'm always thinking, and this is how I operate. I've talked about this before. When the market is super, super weak, what are the strongest stocks in the market? That's what led me to long Netflix. That's what led me to long Palantir. That's what led me to long Uber. That's what led me to try Hood. That's what led me to buy CrowdStrike. That's what got me into some of these earnings gappers like TMDX and Toast, etc. So what's the market? What are the best acting stocks when the market is weak? And then on the flip side of that, when the market is super, super strong, what are your weakest stocks? I made mention in the room, XLV. I made mention in the room, the XLVs, the home builders, the solar stocks, etc. And then, of course, obviously, you guys know how you guys understand how that works, tracking relative strength and using your scanners, to find stocks in top 40 groups and stocks that are holding up best. How to identify V-shaped recovery is one of the 4 stages. I don't understand, Carter, what exactly you mean by this. I don't identify a V-shaped recovery before it happens. I'm either in one or I'm not, but before the V-shaped recovery actually happens, I have a setup that I understand. Usually a flat base breakout, a little high type flag, undercut and rally. So, if you guys were on stream going back a few months, and we were looking at, call it Netflix, right? And 854 was the level down here, right? So this was your March low. This was a stock that could hardly break its March low and then recovered right through its left side. So if this is your low, right, then this is your undercut and rally. Stan Weinstein says there are 4 stages. Is there ever an in between like a V shape? Yeah, of course there are, but you have to you have to understand he's looking at moving averages, right? So that's how Stan's identifying what's in stage 4, what's stage 3, what's stage 2, uptrend, what's stage 1, which is your basing, right? Like Netflix never broke down into a stage 4. This is a stage 2 uptrend still, right? So, and then this is just a setup within the stage 2 uptrend, which is undercut and rally. For me, a reclaim of the 50. For me, a break of a flat base, a gap up on earnings. And then for me, I took my entry 1,019 with my stop at the low of the day, 1,004, right? $15 risk on $1,000 stock. You're talking about peanuts. And then now, you're at 1,100 plus. So hopefully that makes sense. Oh my goodness. What an absolute miss on my part with IONQ. What a shame. What a shame. Almost a $7, $8 fade. God, I could have done better there. Stock Maniac. So something that's above key moving averages, I'm going to use hourly moving averages. And so, for instance, something like CoreWeave with where I shorted it, I'm going to be looking at this 5 simple moving average. So this is going to be a little bit higher today, but something like 94 was really the spot that I was thinking. So even another, $1.50 on CoreWeave, I will make sure that I'm out half. And then on the flip side of that, I'm just going to be using now these declining 60-minute moving averages. You see how CoreWeave is now below the declining EMA on the hourly, the 60, the 20. The 50 and the 20. I'm going to be using this 50 to cover, so a reclaim of the 50 and I won't be out. You can come back up and test the 50. But at that point, I'll only be left with half my position if this thing wants to fade to, $94. So, and then again, even a move to 85, I'll cover a little bit more, right? And then I would just hang out in the last little bit of my token shares for a move to the 10-day. If this is like a breakdown below the 200, if this is a breakdown below the, like a bear flag, a earnings gap down, then I want to be much, much, much more patient, because as far as I'm concerned, even though CoreWeave's having a down day, it's still an uptrend. So could very well be that I nailed the highs, but I won't know that. That's only in hindsight. And if this thing wants to stay below its 50 EMA on the hourly, then I'm just comfortable to sit in here, for perpetuity if this thing wants to go all the way back to 60, right? And then if you're going to give me like a 40% move on a short, right? Like if I'm short up here and you're going to give me a move all the way to, 60 something bucks, it's like a 40% short, 30% short. Like, there's nothing, I can't ask for too much more. No, those arrows on my charts are not entries and exits. I wish that execution would look fantastic, wouldn't it? Those arrows are a MACD histogram, and they help me on a smaller time frame to take my entries. I understand taking profits in layers, but should we also do the same if the stock is going against us? Say it hasn't hit our stop, but it isn't acting right. Maybe take off half. Any thoughts? Jess, that's actually a pretty good question. But the reality is, okay, so whenever I buy something, right, for like the first time, almost always, and I really don't make too many exceptions to the rule, is if I buy a breakout, quote unquote, my stop is low of day. So I'm just respecting my stop. So I'm not, quote unquote, taking profits in layers. Like I'm not trying to get out of my position too early. I'm trying to know what my loss is before I ever get in. And then I'm just trying to let it work. So if I buy something and then my stop is low of day, that's it, right? I size in right, knowing that my stop is low of day, and I don't mess with it anymore. And then like if a stock is working for me for a few days, I peel some into strength, and then I just let it work on the ascending moving average. Like the trade is done, right? Like, okay, so last 2 days, Uber hasn't been acting perfect, right? But I bought my Uber at 75. I'm all trimmed up on this thing. And now it's not doing anything but pulling back to its ascending 20, right? If we're going to close below the ascending 20, then I'm going to have some problems. I'm probably going to have to take my money and go. But the reality is that I'm all trimmed up on my Uber. There's nothing more I can do about this anymore in terms of trimming it, or trimming it a few days, like trimming some more a few days ago or trimming some more yesterday. Like, I have to just respect my ascending moving averages. That's it. Those are the rules, right? Because if you don't, and you just start peeling some off, you're never going to catch a stock like ANF, right? You're never going to catch this. And I want to catch this, right? So at some point in your careers, guys, you want to catch that. But how do you catch that if you just are like, oh, I sold ANF, it wasn't acting well here? Well, if you bought it way down here, right, there should have been no reason to be freaked out about that tiny little move, right? You should already be using if you're way up here now, you should be using the 50 simple moving average. So, if you bought it, call it 30, and now all of a sudden you've trimmed some at 35, and now it's been acting awesome ever since then, and then another earnings gap up, right? You're using the 50 by the time you get to your second earnings gap up. Like, you're not messing with the thing at all. And that's how you end up catching one of these behemoths, right? Like, that's what I want. Yeah, that's what I want to catch. That's what everybody should want to catch. So you just have to respect your rules for what they are. Trim a little bit into strength, trail the rest on the ascending moving average, regardless of, your opinions. KGC, very nice. Could have been a high volume close. It could have just been an earnings gap up. Earnings gap ups are good too. You just have to know what environment you're buying them in. Varun. Could have used you could have used a high volume close. You could have used a 5-minute opening range break on gap up day. Are you ever expanding on entry exit techniques, or do you think you hit a wall and can hit a point of negative returns by trying to add more to the system? That's a great question. Yeah, I don't ever try to do more than what I understand right now. If I do, I'll study it like a madman and then maybe incorporate it into what I'm capable of doing down the road. But I don't ever try to add more to my playbook right now. I don't really see the sense in trying to add more to my playbook right now. It's like I use, and I've talked about this before. I have undercut and rallies, right? I got earnings gap ups. I got high volume closes. I got low cheat setups. I got moving average reclaims, moving average undercut and rallies, high tight flags, flat base breakouts. I mean, I've got, 6, 7, 8 ways that I can get myself into a stock on a daily time frame, and then I do a really, really great job, in my opinion, of scanning the market. So I generally have a pretty good understanding of where money's going, where money's leaving. And then as, time goes on, my situational awareness is getting better. So the day that I buy something, is getting better so that I'm not just chopping myself up. And that last part, the situational awareness, comes with a bit more experience. Yeah, sorry. There you go, Ada. Thank you. Yeah, the higher low setup as well. So yeah, I mean, I literally have a massive playbook. I love that my playbook, Ada, but I do have it as in the education room. I got to just do a better job of annotating some more charts for the room. But yeah, that is my playbook is plenty. And then on the flip side of that, I do double top short sales. I do moving average breakdowns, earnings gap downs, bear flags, bumping its head into overhead resistance using a declining moving average. So I've got a bunch of ways that I get into things too. Oof, man, they're hitting Amazon pretty hard this morning. Amazon, Meta. Indeed. Who's excited for today? Probably a bunch of nothing for myself, honestly. I can't be doing too much. I knew I should have tried to take a little stab at MSTR yesterday. What did MSTZ look like? Oh, man. Shame. But yeah, if you guys got any more questions, I am here on that ANF example or any example of a buy that works for you right away. Do you have a set rule of how much of the original position you leave for a trail for the bigger time frame? Yes. So two things. You have to remember how well it's working for you right off the bat and how quickly the stock moves. When ANF is a little bit slower of a mover, I like to leave on, 60%, 70% of my position, right? Maybe a little bit less, call it 60%. But oftentimes, like I would probably say like 8 out of 10 examples, half, John, right? Because the way I look at it is if I catch a 20% or 15% move on half my position, right? I trim half, and then if it goes higher, I still have half. If it fails from there, thank God I sold half, right? And that's literally how my brain works. And then, it's like a win-win, and it allows me to hold for that, multi-100%. Now, again, how fast the stock moves also determines how much position size I put on. So an ANF, maybe you're doing 15% of your portfolio on that earnings gap up. And then maybe, that thing gives you another setup down the road on the next earnings gap up, right? So you do have multiple times that you can actually add to the thing. So it still becomes a bigger position over time, and you're still trailing the ascending moving average, even as you're treating your second position like a new position. So really good to remember, in kind of that regard, how you can actually still add to your position. But if it's like your original shares, right, just call it half. Like 8 out of 10 trades, I get a nice push, I trim half into strength, and then let the rest work. And then I have a rule for when something gets extended from the 50, I trim 20% of what I have left. And then every ATR above 7, I trim a little bit more and a little bit more and a little bit more. And if something's going parabolic away from the 50, right, I'm trimming into that as well. So, and if something gets, 10, 12, 13 times extended from its 50, I'm just out completely. But if it's just going to trend on the 50, I just hold it. King, I don't know where you own it from. Thoughts on LAES? I won't even look at it. I already know what it is. It's a turd. XDD. It's a turd. Don't put turds in your portfolio. And also, it's running with the quantum names, and quantum names are taking a quantum spill this morning. So just leave them alone. If you own it at $50, just hold it. Well, are you already trimmed on Hood? Are you trimmed? If you're out half, if it were me, I would, be using this ascending 10-day. And then if it closes below, call it $61, maybe you can reduce a few more. But I'm assuming you're trimmed into this, right? If you've sold, a nice piece of it, great. I'm assuming you have. If you've sold a nice piece of it, great. Trail some more on the ascending 10 and then trail the rest on the 20. I mean, I don't know. I can't tell you what to do with it, brother, because it's your money. But, to me, this one acts like one of the leaders. You don't want to just like choke it off too soon. It could be that it ends up pulling back on you kind of nasty, but that's just the harsh realities of being a swing trader. Have you ever noticed a high fail rate of the ORB if there was a move up in pre-market that faded before the open, like CEG, VST? Here's the thing. I won't be taking an opening range break on these gap ups because they were extended to begin with, right? So macro, I already have a rule that I don't buy stocks that are more than 4 times average true range from their 50, right? And CEG was already too extended from the 50. So just to give you an example, let me pull up the exact okay, so CEG was and is 7.86 times its average true range from the 50 simple moving average. Okay? 7.86. So call it almost 8 times. I don't buy stocks more than 4 times their average true range from the 50. So yeah, if it's extended, there's going to be a higher failure rate. And there should be. It's extended. So again, this is why, even in the video last night, I was telling people there's probably nothing to do out here. The longer things go sideways for, the better. Like, I know there's literally going to be morons out there, and I don't want to call them morons, were literally trying to buy GEV. Like, if GEV held up 470s, something like that, and not back to 458, but call it 470s, there would literally be idiots buying this thing up here for some godforsaken reason, right? Without any sideways. They just think that they didn't like it down here. They didn't like it here. They didn't like it up here. But now all of a sudden up here, they fucking love it for some reason. So drives me insane that people chase. It's crazy. But, those are the people that don't survive too long in the market. So, you kind of need to cleanse those people out anyway. 20 days. 20 days for ATR. A month. Effectively a month of price action. Yeah, Noda, I think, and you're in the room, are you not? I'm pretty positive. There's nothing to do here, right? I said it last night in the video. There's nothing to do at all. Just this is a great opportunity to see exactly what holds up best, and if the 50 simple moving average is going to catch up. Is the 50 simple moving average going to catch up? No, nothing has changed, right? I still like ADR. So for instance, on a stock like CEG, ADR is 3.42, ATR is 3.91, accounting for the gaps. So you could use either. They're effectively the same. They'll both tell you the same thing, Stock Maniac. They're wildly extended. They will both tell you the exact same thing. So it makes no difference. Average true range just accounts for overnight gaps as well. And for instance, like on Chinese equities, I want to know that because this damn thing's so gappy, right? So like if I were to say to you, what's the ADR versus ATR on something like XPEV, right? The ADR is 2.62 because it only moves so much intraday, but it's 5.82 because of what it gaps up and down overnight. So, on names that you notice are generally tend to be pretty gappy, you want to use ATR. If the stock moves linear and doesn't gap up and down too much overnight, then ATR or ADR is just fine because they'll be really, really similar. This is exactly right, Gabo. I saw a lot of cups, but very few handles. A lot of cups, few handles. Matter, man. Ouch. Ouchie. Man, I could go for a coffee. I hope you guys have an awesome Friday too. I'm here for about 5 more minutes. If you guys have any questions, please feel free to answer. Love you guys for every single day, the amount of you that show up and show support. Hope you guys like the office. We got the treadmill out of here. Treadmill is gone. I put my casting couch in. If you know, you know. Just kidding, just kidding. But yeah, the room's feeling a whole lot better. Trader Brad. Uh, oh man. So I just try to keep it lighthearted, man. I just try to have some fun. This trading thing could be a little lonely. Also, just a quick question, I guess for some of you, for those of you who are typing, I've been thinking about doing maybe like this 10-minute end of day. It won't be a live like this, but I'll just record myself just doing like a 10-minute recap of what happened on the day, maybe names that I executed on, what I did, what I stopped out on, what I'm holding, etc. And then just post it up on X and on my YouTube. And then that way, they'll be in both places. I know some people from X have been following me, following the YouTube page. So I was just going to maybe start doing these like little 10 to 15 minute, just market recap videos, what happened, what moved, what was exciting, what gapped down, et cetera, just, some thoughts, and then just post them here. So cool. It seems like some of you guys are giving it the fire emoji. Anthony, I loved my Nordic track. It was a real pain in the ass to take apart. But I moved it with all the rest of the workout equipment into the basement, rightfully so, next to the Peloton, next to the rest of the stuff that we got in the house, and cleaned up the office a little bit. It's not so much of an eyesore. So cool. Yeah, I'll do one tonight, and it'll just be, kind of recapping the week. Maybe things that I did, things that I didn't, where I took some losses, where I had some W's, and, maybe what we're still holding and what we're not. So yeah, that's exactly kind of my plan. That's kind of exactly my plan, how things unfolded for the day. So and I'll probably start doing that. I might even start today, just kind of like a little week recap. And then, I normally scan in the evening. So, but just kind of to give myself a little refresher as to what happened. And, for those of you guys who can't be in front of your screens during the trading day, at least you guys got some thoughts on, what the hell went on during the day. Yeah, there's literally nothing for me to do here today, which is awesome. KGC, maybe a little bit more of a gap up into 15 so I could peel some off. This Tesla was starting to look so damn good too. And if we close, sub the 10 simple moving average, or, close to yesterday's opening print, 332, I got to trim some off. I got a pretty big Tesla position. So I'd like to get paid. I'm up, 40 something points on it. Yeah, there's really not a whole lot to do today. So that's nice. At least we get to enjoy our Friday, right? We got a 3-day weekend. I unfortunately didn't plan any trips, like to go anywhere. Plus I got the 2 dogs. So unless I left them with the babysitter, it's like we were talking, do we quickly fly out to Las Vegas for a few days? Do we go to San Diego for a few days? Kind of messed up, but I did it to myself. Should have been better prepped. If you add to a position that you are trailing with 50 SMA, do you consider it as a new position? It depends the setup. It depends how tight it is. So the way I look at it is, if I didn't even own it, right? Would I be comfortable buying it here as a new position, right? That helps get me into the right mind frame. So like, for instance, I own Tesla from 292, but if it finishes building out its flag and then it's going to break out or gives me a higher low setup before the breakout, right? And I buy it, sometimes I like to tell myself, if I didn't own it at 292, right? How are you trying to get yourself situated into this thing as a new buy? So even my ads, I want them to be, because I don't just add and then all of a sudden say, oh yeah, now I've got a 308 cost basis. I'm just going to, extend my stop all the way to 308. Hell no. I trail my original shares on their respective moving average, and I set my stop at the low of the day on my new ads. And I say to myself, if I didn't own Tesla at all, where would my stop loss be? And is this a good enough setup to be a buyer of it as if I never owned it? That way I'm getting myself into the right mind frame. Like, there's good expected value with this setup. I understand this setup. I see that the market's going higher. I see that this is a valid setup, and it just gets me into the right mind frame. My videos for May 14th and 22nd aren't complete. Oh, okay. I'll look into that and see if I can re-upload them. Steve-O, how would I manage my trading if you were in Asia with the time zone? So, well, 8:30 p.m. is not a terrible open, right? So I would just, if I were you, I would trade from 8:30 p.m. until, call it 11 p.m. or even like 11, and you only need like 2.5 hours, and then just set your stops, at your low of the day. In fact, those are pretty great hours if you had to ask me. 8:30 to 11, then go to sleep, set your stops, wake up, get your workout in, go about your life, do your grocery shopping, and then just come back and you go back to work at at 7:30 p.m. prepping for the market open. That doesn't sound too terrible at all. No, Tesla would not be a potential buy for me today because of where it would have to come from, right? So Tesla for me wouldn't even be a buy unless we got over like 349, right? 348. So, and then, I also see this wick up here at 355, which is some supply. So, for me, this could just be a higher low setup, but from where it would have to come from and what the market would have to be doing, and the fact that we're going into a 3-day weekend, I don't really want to do that, right? I don't want to be a buyer going into this 3-day weekend like this. It just seems like that would be a real pain in the ass. Like I said on last night's video, I don't really know what Trump, Besson, or Lucknick are going to say over the weekend. And I don't want to expose myself to that kind of risk on a new position, right? If I own it from before and I'm trimmed, I don't give a shit. But if I'm going to just go ahead and initiate something new, I want some cushion on it overnight. And, for instance, if Tesla moves 4.5% per day, but now it's gapping down, to 37, and then now I'm trying to buy it at 48, right? I'm buying it when it's already moved 3.5%. So like, what am I supposed to get? A $3-4 cushion on my new buy on Tesla, right? That's not enough cushion. So hopefully that makes sense. And anyway, with that, guys, thank you guys all a ton for being here. Please have a safe 3-day weekend. Enjoy your 3-day weekend. You guys are awesome. Thank you guys always for showing up and asking tons of questions. Swingley, thank you. And again, please have a safe weekend. Don't do anything I wouldn't do. And we will see you guys bright and early Monday morning. Cheers. Thank you guys.